we've been really calling the acceleration, the inflection in data center AI spending for NVIDIA for the last 18 months. We really coped, like the transformation ChatGPT was creating in the market. And since then, we've really developed an expertise at looking what's happening at every single step of the value chain. So we look at memory manufacturers, chip manufacturers, we look at NVIDIA, we look at NVIDIA clients, and we compare what we hear from all these steps in the supply chain to try and figure out whether NVIDIA is expectations or NVIDIA are like behind what we think is going to happen or ahead of it. And what we realized this week is that when you listen to memory manufacturers, they're telling you we are going to double capacity next year. When you listen to TSMC about CoWoS capacity, the packaging technology used for these chips, it's going to double next year. And we compare that to where expectation stands for NVIDIA today. Expectations have gone up a lot in the last 3 weeks by 20%. We are like, oh, expectations are actually healthy. They reflect what's happening. And then we look at what clients of NVIDIA are saying, which is we're going to build a $100 billion AI cluster at Microsoft. We are building a 1 million chip cluster at Google, a 300,000 chip at Tesla, et cetera. And we add up all these data points and we compare that to what is in expectations. And we see a picture that for the first time makes sense. So for the first time, we think NVIDIA might not exceed expectations. And so my job is really to give an advance warning to my clients on that kind of situation. So that's what we see, and we felt we had to publish it today.
That was New Street Research's Pierre Ferragu, talking about why he downgraded Nvidia stock from buy to neutral. Many investors thought that this take was extremely controversial, and Nvidia stock even dipped after the news. Even though many analysts on Wall Street are still bullish, with 37 out of 41 analysts covering the stock in the past 3 months, giving it a strong buy rating, Ferragu believes that there's no more room for upside. But the renowned tech analyst, Dan Ives, made it clear that he disagrees with him. So, in today's video, we're going to walk you through the opinions of both analysts so you can decide if now is the time to buy more Nvidia shares or if the stock has peaked and won't be seeing any more upside. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
The story that we've known for the better part of 2 or 3 years now remains true, and that's that those stocks mostly have better growth profiles on the top, the middle, the bottom line. Across the board, they just are better performing companies than the rest of the index, and so they warrant higher valuations, and by extension, they've done quite well this year. But I wouldn't read anything in terms of any economic signals out of it. I think it's just, again, those companies are just acting and performing incredibly well.
Recently, New Street Research downgraded Nvidia from buy to neutral with a $135 price target. And while this price target is still above where Nvidia stock is currently trading and reflects an upside, it's still nowhere near as bullish as Dan Ives' Nvidia price target of $200. According to New Street's analysis, GPU revenues will see a robust 35% increase by 2025, and this aligns closely with the firm's earlier forecasts leading into earnings. But the firm still emphasized that there's limited potential for more upside, citing insights gathered from the industry value chain, and this is why the firm downgraded the stock. Analyst Pierre Ferragu also added that significant additional gains would depend on a bullish scenario where post-2025 prospects notably improve. But this is something that the firm currently finds uncertain. For Nvidia stock investors, as well as potential investors who are interested in buying Nvidia shares, it's important to look at the bull case and the bear case so they can decide how they feel about the stock. And now that we've heard a bearish opinion, let's take a look at why Dan Ives disagrees with Ferragu and thinks that there's still more room for the stock to run. Hello, everyone, and welcome back to Investocracy.
We're still early.
How early? Explain. I mean, to people who say, how can that possibly be true? Now you're starting to see the articles trickle out. Oh, AI might not be that transformative. Oh, talk about why this stock can still have more room to run.
Yeah, you bet. So people get nervous, and I get it. Don't get me wrong. I mean, the stock, and not just stock, but the numbers have run so far, so quickly that people do worry about sustainability, and I understand that. But at the same time, you can sort of look at where the shares are trading on a valuation basis. They're much cheaper than they were before this started. As much as the stock has gone up, like the demand for the parts and the impact on the financials has gone up even more. It's been really amazing. We are at the point now where we're seeing like massive amounts of capex from the hyperscale players, which I think is good. I think where people get nervous is on the enterprise side. We are still in the experimentation phase, and this is true. Like enterprises tend to move slower, but I do like the amount of breadth that we are seeing here. There are many enterprises that actually are experimenting here. Nvidia talked about this. I think they talked about like large cloud vendors were only about 40 or 45% of their total revenues there. Their customer base is still broadening out. We are seeing more and more deployments as business models are getting built on the enterprise side. But it does take time. Like the hyperscalers can build up very quickly. The enterprises, take a little longer. And I kind of get that nervousness. But at the same time, everything we're seeing right now, at least in terms of near medium-term demand, still seems really strong. It doesn't look like we're seeing any signs of slowdowns yet.
Dan Ives has always been vocal about his bullishness on Nvidia stock, and he thinks that the company will reach a $4 trillion market cap very soon. The analyst isn't at all worried about Nvidia stock dropping, saying that it's just a near-term pullback. He also praised Nvidia's CEO Jensen Huang and said that he's one of the most prominent figures in the entire AI industry. He also said that every dollar spent on the company's chips generates $8 to $10 in the rest of the sector, which showcases the important role that Nvidia plays. Dan Ives isn't the only Wall Street analyst that's still bullish on the company, despite the recent pullbacks. In fact, 21 of the 38 analysts surveyed by LSEG this month still recommend Nvidia as a buy or strong buy. And this comes after some massive gains as well, as the stock has soared more than 150% year to date, and the firm has a market cap of $3 trillion. So, which analysts are right here? The ones who say that the stock has peaked, or the ones who predict more upside? Let's take a look at what's coming up next for Nvidia and Nvidia stock to find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
The market cap is $3.15 trillion. And when we did our segment a little while ago on the race to $4 trillion, I think it was Gil Loria made the point, you can't have both Microsoft and Nvidia reach $4 trillion at the same time, because his line was basically, Microsoft can't afford for Nvidia to be that necessary. And if Nvidia is going to be that large, then Microsoft's margins will be destroyed and its profitability will be called into question.
I don't know about destroyed. You have to remember, a lot of the capex that's going on right now is not necessarily all incremental. Like, you can go look at sort of spending on traditional data centers, CPUs and traditional servers, networking. They're all in the toilet right now, right? I mean, so there's been a pivoting of spend from more traditional things to GPUs. Some of this GPU capacity as well is fungible. Like these cloud vendors can use it for their existing needs as well. Not all of it is generative AI. Some of it is things like recommendation engines from players like Meta, like other like more traditional, more legacy types of machine learning where there's already a clear return on that. All right. And you can sort of run through the math. Like if the returns take a little longer, I mean, it doesn't impact their margins all that much. It's a colleague of mine who covers Microsoft, he did some of this work. It's a few hundred basis points, I think, on margins given the incremental depreciation load. It's not crazy the amount of money that they're spending at this point. It's not like they go down the toilet if this doesn't come down. So no, I kind of disagree. I push back on that a little bit.
We think that it's very likely for Nvidia stock to go up again, and that's thanks to multiple catalysts that Nvidia has coming up. For one, if Nvidia's GPU sales of its new Blackwell chips are super high, the stock will definitely go up. And it's extremely reasonable to assume that this will happen, as Nvidia has already indicated that the demand for these new Blackwell GPUs is greater than supply, a situation that could continue well into 2025. This leads us to our next point, which is the Blackwell GPU's gross margins. It's safe to say that they're going to be extremely impressive, as Blackwell's total cost of ownership is 25 times lower than its Hopper predecessors, and it also has a much lower energy consumption. Also, if the Blackwell platform turns out to be a huge success, then investors will become really excited about the potential gains that the company's upcoming Rubin platform will offer, which could lead to more people buying Nvidia shares and boosting the stock price. Many tech industry experts are expecting Nvidia to be the first company to reach a $4 trillion market cap, and this will be driven by the seemingly unending demand for its AI chips. Even Dan Ives believes that Nvidia will be the first company to hit that mark, and said in an interview that the company's GPUs are the new oil or gold in the tech world with no real competition. But, considering the stock's explosive growth over the past few years, many analysts are now saying that the company's valuation is now very high and doesn't account for rising competition in the semiconductor market. Despite this, Ives pointed out that while Nvidia's shares have surged, its revenues and earnings have followed suit. In its most recent quarter, the company reported a record $26 billion in revenues and $14.8 billion in net income, a stark difference from 2021's $5.8 billion in revenues and net income of $1.9 billion for the same quarter. Louis Navalier, founder and chairman of family office Navalier and Associates, also brushed off the competition argument, saying that Nvidia essentially has a monopoly on AI chips, which will lead to consistent sales and earnings growth for years to come. He also added that, like Elon Musk, Nvidia CEO Jensen Huang has got kind of a cult status, which will continue to drive retail investors towards the stock. Additionally, the AI market is still in the early days of its growth story, with analysts forecasting that today's $200 billion AI market may surpass $1 trillion by the end of the decade. This is incredible news for Nvidia, as the company sells the world's top-performing GPUs, which power some of the most crucial AI tasks like training and inferencing. With all of this in mind, we think that Nvidia stock is still a great buy for long-term growth investors, and the current dip only serves as a buying opportunity before upcoming catalysts like the Q2 earnings in August and the upcoming release of the Blackwell chips. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.